Hello, all, and welcome. I hope you're having a great day. Today, we are talking about United Healthcare stock. Now, I know there isn't a shortage of people talking about it, so I thought I would do the research and discuss the good, bad, and the ugly for myself. Just in case you didn't get the hint from the company name, United Healthcare does, surprise, healthcare. In fact, they're one of the largest healthcare providers in the country, ranging from insurance to Optum prescription drug services to hospice. They've had a run of bad press and tragedies over the past year, and especially past couple of quarters, and the market has freaked out on them. So let's go over what happened to make them drop, how they're doing now, and their latest earnings call, and maybe pull out a crystal ball for a little future forecasting. So first, the bad and the ugly. I put together a little timeline, and the past year has not been particularly great for UNH going back to January 2024. To start the year, shares dropped as medical costs exceeded expectations, despite beating Q4 profit and revenue forecasts. In February, Change Healthcare, the UnitedHealth tech subsidiary, suffered a major cyber attack by the Black Cat ransomware group, disrupting pharmacy networks and claims processing nationwide. A few days later, UNH confirmed the attack. It took about 1 month for Change Healthcare's pharmacy network to come back online. A lot of outage, a lot of money lost. In April, UnitedHealth paid attackers $22 million and estimates the cyber attack will cost up to $1.6 billion in 2024 in tech upgrades, labor, fines, etc., but maintains its annual earnings forecast. In May, Optum CEO Andrew Whitty tells Congress that hackers may have stolen about 1/3 of the Americans' information. That's about 130 million people. In September, the FTC sues UnitedHealth's Optum Rx and other PBMs for allegedly steering diabetes patients to more expensive insulin to increase rebates. In October, UnitedHealth issues a 2025 profit forecast well below Wall Street estimates, citing pressure on government insurance programs. In November, the DOJ and 3 states sued to block UnitedHealth's $3.3 billion acquisition of Amedisys, citing antitrust concerns in home health services, specifically hospice. In December, Brian Thompson, CEO of UnitedHealthcare, is fatally shot in Manhattan by Luigi Mangione, who is later arrested and charged, and as we know, did it. That takes us to January 2025. UnitedHealth confirms the cyber attack impacted 190 million people, making it the largest healthcare data breach in U.S. history. In February, Wall Street Journal reports the DOJ is investigating UnitedHealth's Medicare billing practices for potential fraud. In April, UnitedHealth reports an unusual and unacceptable earnings miss due to medical costs, triggering a greater than 20% stock drop. May, shareholders' class action lawsuit is filed, accusing UnitedHealth of hiding the negative business impacts following Thompson's demise. May, UnitedHealth suspends its 2025 financial forecast. CEO Andrew Whitty steps down suddenly amid major stock price drop. The DOJ escalates to a criminal investigation into possible Medicare fraud, per Wall Street Journal. That is still going on. In July of 2025, UnitedHealth confirms in an SEC filing it is under formal criminal and civil investigation by DOJ and is cooperating. Ongoing allegations from May. Reports emerged that UnitedHealth paid secret bonuses to nursing homes to avoid hospital transfers, incentivized delaying medical necessary care, leading to patient harm, altered patient risk scores, and Medicare Advantage to inflate payments to the tune of $8.7 billion in 2021 alone. Now, these are all allegations. Nothing is proven until, there's an investigation. August 14th to 15th of 2025, after a 2-year regulatory battle, UnitedHealth completed its $3.3 billion all-cash purchase of Amedisys, paying $101 per share. Finally, some good news. You can see from the chart how the stock reacted to each incident. That's a lot of bad news and ugly for 1.5 years. So what about the good? That is where we turn to the earnings call and, of course, the boring statements. Let's start with a spreadsheet. As you can see, we have UNH here with a dividend yield of 2.73%. More on that later. The adjusted EPS of last quarter was $19.70. Forward guidance is $16.25, up from $16. Now, I think they did that just to throw the investors and shareholders a little bone there. 0.25 is not that great of an increase, but at least it's an increase. PE trailing 12 months of 16.64 times. Market cap of 288 to 299 billion, depending on the day you look at the stock price, as it's pretty volatile. Total assets for the last 5 quarters is up 5.33%, but liabilities are also up 7.18%. We'd like to see assets grow more than liabilities, but they did just acquire a company and incurred a lot of litigation fees. Net income over the last 5 quarters is down a whopping 61.22%. And that's never good, but corresponds with all the previous bad and ugly. Net income over the last 5 years is better, only down 6.48%. So they're actually doing pretty well if you remove the last 5 to 7 quarters. Cash flow quarterly is up 7.01%, and 5-year is a whopping 130.42%. These guys are a cash machine, so this isn't really a surprise. If we look at their operating income, they make between 20 and 30 billion a year and between 4 and 8 billion per quarter. They're down 51.3% over the last 5 quarters, but still made 4.2 billion in their down quarter. Looking at the all-important dividends, they have a history of dividend growth over the past 10 years, and looking at their payout ratio of 44.61% and coverage ratio of 224%, they can easily cover their dividend, even in this down year. And that is one thing we like to see, a solid company getting beat up with a good dividend. From the past earnings call, the new CFO, Wayne DeVite, gave some remarks towards forward guidance for the next 2 years, despite suspending guidance till January. He said, "We are optimistic in our ability to execute on our 2026 plans, but there are remaining headwinds we'll have to overcome. Items to keep in mind include we are entering the final year of V28, which represents a more than $6 billion headwind to the overall enterprise. Further investment in Optum Health and Optum Insight is needed, and we are accelerating some of those investments as noted in our 3rd quarter results. We're also accelerating our pace of AI applications to fundamentally advance a vast spectrum of processes and capabilities we expect will structurally improve our enterprise performance." He also said our effective tax rate is expected to return to a more normalized level in 26 as compared to 25. And finally, investment income should continue to move lower as interest rates decline. Again, not a great thing. But from a tailwind perspective, he said, our pricing efforts will be a catalyst for earnings growth as we begin returning to our long-term margin goals, with particularly solid year-over-year results expected in our commercial and Medicare businesses. So basically what he's saying is they mispriced a bunch of their products over the last few years. He went on to say, we also expect stability and a measured return to growth in our Optum entities, with aspects of that growth being reinvested in the business, specifically Optum Health and Optum Insight. These investments may slow 2026 growth, but should accelerate growth in 2027, more in line with historical expectations. He goes on to say that they're paying down debt, identifying opportunities to reduce interest expense as a result of a declining rate environment. 2026 will not be a very good year, but it won't be as bad as 25. It's a restructuring year, and they're hoping to bounce back in 2027. So that was a lot to go through, but it helps shape where UNH is going. There's a lot more to this and could be a part 2 video. So let us know if that's something you want to see. The bottom line is 2026 will be another down year as a reconstruction year under the new old CEO, Stephen Hemsley. They're expecting a 1 million membership contraction and some headwinds as they finish repricing their products to be more in line with the current environment. That also means higher healthcare costs for all of us. Yay! As for whether or not to buy it, well, I feel the best buying opportunity was in April at $238 a share, but this is one of those buy and hold forever stocks. The unknown here is what the DOJ will do with their criminal investigation. If they do find something and they do charge the company or people, then expect a recovery to be more in line with 3 to 5 years range rather than 2 to 3 years. If you buy them, expect to hold it at least 5 years or more. With that, let us know if you plan to buy it, already own it, or won't touch it with a 19.5-foot pole. Thank you again for joining us on this financial journey. Make sure to like and subscribe to show the almighty algorithms we need to be watched. And as always, happy investing.